that pure volume of those portals that we've all been given access to mean that we either have to split our time across several different places or we don't engage so much. And what's happening is people are really voting with their feet and they're not engaging with all those portals. So
as CCO at Beyond Encryption, you work with a lot of enterprise clients on addressing their customer portal engagement problems, their efficiency challenges, and you're really aware of what those challenges are across the industry and the commonalities between those different companies. When it comes to portal engagement, we've done some research ourselves. We know that the average consumer has 119 different logins to portals and apps. And specifically within FS, this has an impact on engagement. Only 7% of people prefer to receive documents via a portal over post and email. Less than 20% of portal users are active in any given month for an average financial services company. So there's definitely some things going on when it comes to engagement and portals, and we know that they're widely used. Can you give us an idea of how we got to this point in financial services? Where are we with portals at the moment? How much are they used? And then the challenges that you see organisations facing.
Sure. Yeah, and I guess it's a little bit of a conundrum, or a big question mark around how we managed to get ourselves to where we are now. I think the advent of digital comms led people down a pathway to believe that there was a great opportunity to create a portal, a presentation of their service that they could control completely, and that would be enough to encourage their customers to come and use it and read the content of it and everything. And there was a great theory there. The practice, however, is slightly different. And the survey that you touched on and the research output that we got, indicates why that was a problem was because everyone had the same sort of idea, and that pure volume of those portals that we've all been given access to mean that we either have to split our time across several different places or we don't engage so much. And what's happening is people are really voting with their feet and they're not engaging with all those portals. So yeah, we've got to this position. I guess the first thing we need to do is really, as with many things, the first thing you have to do is admit you've got a problem. And we're finding that people who have had those portal services in place for quite some time are now recognizing and are happy to admit that it's not the answer for all of their customers. And I think that's really, really important. Portals do have a place and they are incredibly useful, but they're not for everyone. And I don't know, something makes me think back onto the Simpsons episode where they introduced the monorail into Springfield, and this great salesman came in, and this was the answer to all their prayers. They needed everyone needed the monorail, and they all believed it, and they all got hyped up about it. And then when they got it, it obviously wasn't the answer for everyone. So, and I think I kind of get that association with the portal situation where we've all introduced these things and they're just not necessarily the right thing for everyone, and they're not the answer to every problem that's out there. And I think that's really important. Firstly, admitting that that's the case, and then looking at what do you need to supplement that portal with to maybe cover more of your customers, or help lead from where a customer may start a journey and engagement to the portal at a later stage, and it not being used for everything all of the time for everyone. I think that's really key.
That's really funny because I thought about the exact same Simpsons episode the other day. I remember what made me think of it, but in exactly the same context as well. Because portals have been this thing that have been sold into a lot of financial services companies, not sold by vendors specifically, but sold internally as well and championed internally. Because you have this situation where you have this owned data, if the journey is owned, you can customize everything. But like you point out, it may not be that it's everybody's choice to go to your own walled garden, your own gated place to get their content. So for financial services companies that have identified this problem, if we think of it in rehab terms, they know they've got a problem. What do they do next? Obviously it's a problem that's a societal problem in many ways. We've got 119 portals, isn't my company's fault specifically. But I'm contributing to that problem. So how can I start to alleviate the burden of all of these accounts on my customers?
So I think it's really important to ask your customers what they want as a first stage. I think going back to that situation where we've got to, there was always a belief that if we controlled the narrative, that people would buy more from us, and therefore we wouldn't end up in the situation where you had 119 portals, because I would be your answer to everything that I could possibly sell you. You'd buy it from me because I can control the messaging. So I think going back to that situation where we've got to, the reality is that customers are valuing choice and are therefore offering or buying from a plethora of different companies, which means that they end up with that multi-access issue. What it all comes down to is that fair value exchange. What am I going to get back for putting in the time that I need to come to you and see what you're offering me? So if I'm not particularly interested in coming to you on a regular basis to find out about a long-term product or investment that I might have, well, then that may be okay. But don't prompt me every week to come and read your stuff, because I'm probably not going to do that. But getting that fair value exchange adjusted, financial services is pretty terrible, I would say, in that fair value exchange altogether. If you go through a process of applying for a product, they ask you for so much information. If you go down, for example, a life insurance route, you tell them everything about yourself, your medical history, your family history, and all of that stuff, and all you get back is a premium. They don't explain to you what you told them, how it influenced what they did at all. You just get told a premium, or you get excluded, or there's very little information that's passed back. So there's already a mass imbalance in that fair value exchange. So I would say that companies will need to add more value to their customers if they're going to come to them, and that will encourage them to come back. So they need to think about what other things can they do to help their customers. And it doesn't necessarily mean, let's try and flog them another product. It can be adding services and benefits and features which add value to their life or help them, save them time, saves them money, saves them anything that it addresses that balance. And I think that's really important.
I think it's really key to point out as well that this is not something that's one and done, that you do once. And what we see a lot with financial services companies versus tech companies, for instance, is a tech company who has somewhere for customers, users to log into, will constantly be refining, optimizing, releasing new services and fixing journeys, addressing friction. With a lot of financial services companies, that those loops of refinement don't happen often enough. So they're aware of maybe some portal challenges. They go, right, we need to make sure that the value's enough for people to come to our portal, for the content that's behind a login gate, and that we're delivering value elsewhere or content elsewhere. If it's not, we'll do this now. And then they leave it. And that data and the research that they've done and the insights that they've got from their customers degrade over time. So they feel like they've addressed this thing, and maybe they review it in a year's time, when maybe this should be done more often. It should be a continual loop of refinements. What kind of guardrails would you suggest these companies put in place in terms of being able to have the right data, the right metrics to decide when they need to address this stuff, when they need to go back and address it, and also how often should they be looking at it?
Yeah, I think it's really that a portal is for life and not just for Christmas type message comes through, then, doesn't it? It's a living thing. You need to make sure that it is current constantly, and make sure that the information that you're showing is is still valid, is still appropriate. Your customers will go through phases of their relationship with you. So if you put all your emphasis around capturing a new customer or the point in which they actually execute on a product, but you don't think about their life thereafter on that online service, then they're not going to be getting value from returning to you. So I think that considering that entire customer lifespan and not focusing too much on day one, I think that's really important. As your customers, a lot of financial services customers will be with them for a considerable amount of time. And through that time, their values and priorities will change. And therefore, an acceptance of that is really important, and an understanding of that, and therefore positioning things slightly differently over time is really, really important too. So I think that's, that to me is quite key, it's a living, evolving experience for the customer, and not, as you mentioned, something which is one and done. That's just not appropriate for an extranet and a long-term customer experience.
So in terms of how often you revisit this and those key metrics to look at, would you say it's more about sort of cohort analysis? So if you've got, your average life cycle of a customer is probably a year for a lot of these, if we're talking insurance, say it's a year, then you should be looking at your portal metrics in depth and deciding on refinements every, 3 points during that life cycle, perhaps? Or how would you go through making those decisions on like revisiting those metrics, and what are they?
I think the appropriate metrics will be dependent on that lifespan of that engagement. If it's an annual renewable product, a general insurance product, then I would say that as a customer, I would expect to set up the policy and then pretty much only engage with it if I need to make a claim, or if I need to tell you about a midterm adjustment, a change of address or whatever. And then again, around near to the renewal time. I think it's pretty unrealistic to expect me to engage with that product on a monthly basis. I would just don't want to do that. If it's a pension product, which I may hold with you for 20, 30, 40 years, well, then through that time, as I mentioned, my priorities as a customer and consumer will change. And therefore, being there and preempting that, and whether that's through customer persona or cohorts of customers and so on, I think that's down to individual firms to see what's the best route for them. But understanding how a customer will change is really important, and what's important to that customer changes. And trying to engage someone in their mid-20s in their pension that is something which they can't touch and feel for another 40 years, probably 50 years if you're only in your 20s right now, then that's really tough. And there may need to be a bit of an acceptance about that you shouldn't expect a high customer engagement at that level. If you can educate, then that's really cool, because you can make a difference to someone's retirement, and particularly early on is the best time to do that. The difficulty is that's the time where the customer is least engaged, and the irony is, when they are interested, it's too late for them to do anything about it. So from a sort of duty of care perspective, trying to build up education and understanding with customers, the ambition has got to be to help them to do things when it makes a difference, and not later when it is too late. And so it's not an easy thing to achieve at all. Otherwise, everyone would be doing it. But I think with the way technology is improved and advanced, then there are more opportunities now to do things differently and do them smarter and do them with less intrusion on the customer, while still having the intended outcome.
So it sounds like the answer is the right time, communicate with customers at the right time via the right channel, depending on the context, and with the right kind of information. So, if we take the pension product as an example, it's not going to be the same for every company, and brands may have different strategies. I think it's a good point to make that, yes, you're a pensions provider and you want to educate your customers around pensions, but it may be that in many instances, engaging them getting them into your portal more often isn't what the customer wants, and it isn't actually good for your brand. Maybe that the opposite in many contexts is, making the times where they do have to touch your portal or you do interact with them easier, more frictionless, maybe a better way to position yourself in the customer's mind, and for those times when they do want to come back to you. So the metrics there would vary massively. Mm-hmm. You wouldn't be looking at conversion rate, you would be looking at customer satisfaction or much more long-term metrics. So in terms of, if I'm a person, a champion within a financial services company looking at this problem, how do you rally that change within an organization where there are so many other priorities? You've got fragmented tech, you've got fragmented data that maybe stops you from being able to do things that you might want to in terms of solutions. Mm-hmm. How do you start that journey of, we've got some challenges with engagement in terms of our customer portal. We want to increase engagement, or we want to make the customer journeys easier. How do I start this change project to rally people around it?
Yeah, I mean, that is a challenge. I think regulation helps with that at times. So the consumer duty is a big catalyst, and understanding as well your customers' vulnerabilities. And I think, we look at vulnerabilities and we talk about them in terms of, whether people have, maybe disabilities with sight and hearing, or cognitive capabilities, or stress and anxiety and so on. I think one thing that is maybe not on the list, which is really important to be on that list, is an understanding of the financial products you've got. So, as a worker, and I get entered into a company pension scheme, I'm not necessarily going to understand what that means. And I don't know, these products have all sorts of special terms and words and their own sort of language and rules and tax implications and so on and so on and so on. And it's enough to bamboozle most people. And as a provider of those products, we understand them. We understand the terminology and the way they work. And we've seen them hundreds and thousands of times already. And therefore, we can kind of know what that customer is going to experience at that time and later on in their life. And we should replay that. And we should comfort people when they enter into a pension scheme about what it is and how it's going to help them in their later life, and how it's really important. And even things like, how does compound interest work? How many people really understand that? If you can provide those sort of tools and bring that stuff to life, and also understand how people engage with content differently, and think about video and pictures as not just words, and ways in which a customer can actually influence, so have interactive stuff as well. I think that's really important. But moving to that from where we are today, one is understanding and appreciating that whatever has been done before hasn't necessarily failed or hasn't been a disaster, but maybe just isn't enough. And whether that's customer expectations increasing, or actually technology has enabled us to do things differently or smarter, or our customers have changed, we need to react to that. And I think it's quite often the case where we see that effectively a business case was created for a portal, and then it delivered, and the benefits of it were therefore assigned to that project. Now, there's perhaps an issue with needing to go back and ask for further investment to achieve what could ultimately look like the same goal. And that's maybe a little bit uncomfortable for people, but I think that's really important. And I think that understanding your customers and bringing those things to life will help the enterprise to understand the needs to do more or do things differently. So I think regulation helps, but I also think having a better understanding of customer and understanding of technology can help to unpick the problem too.
Do you have some examples that you can share of companies that have been through this process, been through this journey of, they've established that they've got challenges around engagement and they've created a transformation project and seen it through, and it's resulted in success or success for now that they're going to need to continue to revisit over time?
Yeah, I think I mean, I don't want to name any names, but firms that have had those services for quite some time and they're established channels within their propositions are more understanding of what they need to do next. Whether that's working with large insurance companies, product providers, or even high street banks. Now that they've had those propositions available for some time, they understand their customer engagement. They understand where usage has maybe plateaued, and therefore they either need to do something different or they need to refine what they've got. I think it's a much more difficult where having these services is a newer thing. So yeah, I think, yes, we do have several examples of firms which have now matured with their online services and propositions and now want to do more. So yes, there's a plateau of the number of customers that will engage with them through their current services, and now they're moving on to, okay, so how do we take the next tranche of customers and get them integrated and working with us digitally, because there are so many benefits to doing that. It's not just about saving money, but it's about increasing that customer engagement, which can lead to whether that's better understanding and appreciation for what they've got, or it could lead to increases in premiums, could lead to increases in product execution as well. But I think it takes time, and I think our experience is that, you need to get past that. We've now got an online presence. That's great. Everyone's going to work with it. Everyone's going to use it. We've seen customers and sort of customers of ours who have then taken from what the level of engagement that they had online, and then tried really, really hard and put lots of effort and time and money into trying to get more people engaged with that same channel. And it's really like pushing water uphill. And then they kind of understand that, okay, maybe this isn't right for everyone, and then we have to do something different. But it's not necessarily an overnight realization, and to do that is quite a tough thing to come up with.
Or even to decide what the solution is, what channel to move on to next or to try. And obviously a lot of that is about choice, and in financial services, consumer duty and regulation plays a part there. When it comes to customer choice, I've got to the point where I've established that some content needs to be delivered in a different way because people aren't engaging with it in the way that they should. I know it's valuable, but maybe this needs to be delivered in a way that's better for the customer. How do I reach the point of going, right, I'm going to use email, I'm going to use text, perhaps, where I'm going to make a decision on that channel? Obviously, data comes into play, but so does choice. And you can't give customers choice about every communication that you send because you're going to overwhelm them. Yeah. But similarly, we've all been in the situation where we've opted for digital comms and we somehow still end up receiving posts that we don't want. You want to give choice, but you don't want to give too much. How would you advise companies go about that?
Yeah, I mean, I think firstly, limit the number of options that are available and test with your customers as to what they want. I think, not look to jump from communication to communication between channels because that can confuse customers. I think building online trust is really important. And if you're flicking between channels all the time, then that can erode that trust. And there should be some limited number of changes, but again, understanding customers' life stages as well may mean that certain channels are more appealing to them at certain times of their lives. Certainly through our work with secure email, we understand that we have a very high engagement level with our secure email service that we offer. Most people have an inbox and regularly review that inbox, and so pushing things to somewhere that people are likely to look is effective. But likewise, it's not everyone. We don't have 100% engagement level with our secure email, so there are some people which are seeking an alternative. So I think understanding customers and asking customers what they want is really important. And I think appreciating when that may change as well. Is there a life event which may change their preference? Is it just about an age piece? understanding generational differences, I think, is really important as well. So yeah, offering choices is important, but not to bamboozle your customer with too much choice. Yeah, and it's absolutely not gonna serve your purpose.
When you think about those main metrics of success, so not the leading metrics that you would look at to establish the problem, but perhaps, I've gone through this transformation project, I'm a year out of it. What would you be looking at in terms of ROI? Have I got a return from my investment in improving my portal engagement, whether that be through improving the value that's within that gated portal or delivering that value elsewhere? What sort of main 2 or 3 metrics would you be looking at? Quite often the metrics that are used to govern success will be a cost avoidance in that situation. So if you would traditionally have been sending communications out in the post, and then you put your portal up and you say, right, okay, we don't need to post anything anymore. Well, that's fine if your customers engage with it. But if you've stopped sending things in the post and you're putting them somewhere where your customers don't go, then you can bank a saving, but that's a false economy. And back to the consumer duty side of things, then what's really important under consumer duty is, one, customers engage with the content that you send them and understand it as well. So just a channel shift is not an appropriate way of measuring success, or switching off something that you can now represent digitally rather than analog. So I think having that return visitor piece is important. So amazing if you get X percentage of your customers who register to use your online service, but consider how often do they return. If you believe that an engaged customer is someone that returns to your service once a year, I think, is that really the best that you can do? And should you be expecting more? Is there an opportunity to get more? And then not only logging on to it, but what are people doing when they're logged on? So I think that's really important too. So there are some very high level metrics which may make things look incredibly successful, but understanding lower level, what they're like and what a customer's behavior is. And, as I said, not just that they registered, but how often do they return? And when they return, what do they do? That's really cool. So digging a little bit deeper into those analytics, I think that's where you'll see whether success is there or not. In terms of the future of portals, do they have one? I guess is the first question. And if so, we've already talked about richer, personalized content, more data about your customers, enriching that experience. Do other things, other tech like AI, perhaps change how we might think about portals in the future? I think there's definitely a future for portals. And the advances in AI and machine learning also will make them be able to be more personalized, to appreciate better what the customer is really trying to do, trying to understand what should be pushed, what should be pulled from them. So definitely they should get better with time. I think that there is a challenge that we shouldn't ignore, where maybe the user of the portal is a customer of an advisor and not having a direct relationship with that product provider as well, and therefore the services that are offered need to be considerate of the relationship the advisor has with the customer as well, which can add another level of complexity to it. But certainly through personalization should come greater appreciation and engagement, because it's really, it feels like it's talking to me and not a generic set of words on a page or a graph that springs up that I can't really understand. Actually, if you put things in a way in which it means something to that customer individually, then that's when you're winning. So you compared portals to the monorail project in The Simpsons. There is a future for the monorail, but we need to make sure that it provides value, gives customers choice, and we continue to refine it long term. I think there's actually a song accompanying the monorail thing. You wouldn't like to do a rendition of what we... It's all right, thank you. No, okay. I wouldn't remember the words and you wouldn't want to hear it.